Hey everyone, and welcome. Today, we're going to tackle a topic that, let's be honest, can feel a little intimidating: Indian income tax. But I promise you, by the end of this quick explainer, you'll have all the essential pieces to understand how it really works. So let's jump right in.
Come on, you know the one. It's a word we hear all the time, especially around budget season. It has a direct impact on our paychecks, our businesses, and pretty much all of our financial plans.
You guessed it, taxes. But here's the thing, they don't have to be this big, scary, confusing monster. The goal here isn't to turn you into a tax wizard overnight. It's to give you the basic building blocks so you can feel confident and in control.
So here's how we're going to break it all down. First, we'll start with the absolute basics. What even is income tax? Then we'll look at the laws that govern it, get a handle on the timeline, figure out who pays, and finally, see how it all clicks into place.
All right, let's dive right in with the big one. What exactly is income tax? Well, to get it, you first need to understand that taxes generally fall into two major categories. And here's the key difference. It's actually pretty simple. With a direct tax, like the income tax we're talking about, the financial hit is directly on you. You earn the money, you pay the tax on it. Simple. But with an indirect tax, like GST, a shopkeeper pays the tax to the government, but then they just add that cost to the price of whatever you're buying. They pass the burden on to you. So the big takeaway, income tax is a direct deal between you and the government.
Okay, so every system needs rules, right? And taxes are no exception. What you might find surprising is that India's tax laws have been around for a very, very long time. We're talking over 150 years.
Yeah, this isn't some new thing. Income tax in India actually goes way, way back to 1860. It was introduced to cover losses from the 1857 mutiny. Over the years, it got revised, and there was this one version in 1922 that was just famously complicated. So eventually the government decided, you know what, we need a clean slate. And that led to the Income Tax Act of 1961, the very foundation of the system we use today, which officially kicked in on April 1st, 1962. So what does that rulebook look like today? Well, think of it in a few layers. At the very top, you've got the big one, the Income Tax Act of 1961. This is kind of like the Constitution for taxes. Then you have the rules, which tell you the nitty-gritty of how to actually follow that law. Every single year, the budget, or the Finance Act, comes along and tweaks things, especially the tax rates. And the whole show is run by an organization called the Central Board of Direct Taxes, or CBDT. Okay, let's tackle what is, hands down, the most confusing part for almost everyone when they're starting out: the timing. See, you don't actually get taxed in the same year that you earn your income. Let's break that down. First up, we have what's called the previous year. This is simply the 12-month period, from April 1st to March 31st, when you're out there earning your money. Just think of this as the year you're out in the fields, planting your seeds and growing your crops. It's the year of earning.
And then right on the heels of the previous year comes the assessment year. This is the year the government assesses or, takes a look at the income you made back in the previous year to figure out your tax. So if the last year was for growing, this is the harvest year, where you tally everything up and pay your share.
So let's put that into a super simple, practical example. You earn all your money in one financial year. We call that the previous year. Then in the next financial year, that's the assessment year, you file your returns and pay the tax on that income you already earned. It's always this two-step dance. Earn first, get taxed later. All right, so we've got the what and the when down. But now for the who and, well, the on what. Who exactly has to pay tax? And how does the government keep track of all the different ways we make money? You'll hear this term a lot in tax speak. Anyone who is liable to pay tax is called an assessee. That's it. It's just the official, slightly fancy word for a taxpayer. So, what kind of income gets taxed? Well, the law is actually really organized about this. It sorts every single rupee you could possibly earn into one of these 5 heads of income. Seriously, think of them as buckets. It doesn't matter if it's your salary, rent you get from a house, profits from your business, gains from selling stocks, or even winning the lottery. It all has to go into one of these 5 buckets. And once you've poured everything into its proper bucket, you just add it all up. And that total? That's what's known as your gross total income, or GTI for short. This is the big number the government starts with before they look at any deductions or anything like that. Okay, this is it. This is the moment where we connect all the dots. We know the what, the when, and the who. Now, let's look at how all that income actually turns into the tax you owe the government. So, India uses something called a progressive slab system. It sounds complicated, but the idea is actually super fair. The more you earn, the higher percentage you contribute. As you can see in this table, your income gets taxed in layers, or slabs. The first chunk of your income is tax-free, the next chunk gets taxed at a low rate, the next chunk at a higher rate, and so on. The key thing to remember is that a higher tax rate only applies to the portion of your income that falls into that specific slab, not your entire income.
So, after all that, why? Why do we go through all this? This quote really brings it home. Taxes are basically the fuel for the country. They're the fees we all pay that allow the government to build roads, run hospitals, fund our defense, and provide all the public services we rely on every day.
So there you have it. From the absolute basics of what a tax is, all the way to how it's calculated. You've now got the core framework. And that kind of leaves us with one last question to chew on. We saw how the law evolved from being very complicated to what it is now. But what could be the next step? How could this whole system be made even simpler, even more intuitive for everyone? It's definitely something to think about. Thanks for tuning in.